So you've worked hard and managed to save money despite the very expensive living costs. And now you want that money to grow and work for you so one day you can retire. Or perhaps you want to reach financial independence so you can live a life free of money worries. Now your question might be, what should I invest my precious hard-earned money in? What is actually worth investing in? Stocks, ETFs, gold, or is perhaps Bitcoin the answer? You've probably heard more and more about Bitcoin lately, but are wondering if Bitcoin is the real way to go. Is it really better than all the other assets out there? In today's video, let's talk about why Bitcoin is the best asset to invest in for the long term. Note guys, this video is not financial advice. This video is for education purposes only. Always do your own research and due diligence before investing any of your money. I will tell you my perspective, why I think Bitcoin is the best investment and why I'll continue to buy it, making it a major part of my portfolio in the next years. Now tell me in the comments if you're like me. I started investing in an ETF index, mostly into the S&P 500. Depending on where you are in the world, you might have invested into the DAX, the Hang Seng Index, Nikkei, or Nifty 50. I also put some money into a savings account and a GIC here in Canada that's similar to a CD if you're in the US, or time deposit elsewhere. Like me, maybe you've also followed the standard portfolio allocation advice of 60-40 or 80-20 or whatever. And yes, my portfolio grew by 50-60% over the last years, but something in me was telling me that that was not enough. My money didn't grow enough, not fast enough, especially not compared to inflation and compared to my financial goals. So when I first came across Bitcoin in 2021, I was intrigued. What's this investment that has grown by so much since its inception? One Bitcoin sold for only 9 cents in 2010, but its price has increased so much over the past 15 years and is now up to $118,000 as per making of this video. So then I started buying a bit of Bitcoin just so that I got invested in it, and with some money on the line, I got motivated to learn more about Bitcoin. I first started buying Bitcoin on this Canadian exchange called Index, by the way. I think it's a great place for beginners to start buying small amounts of Bitcoin. Index's main advantage is that it has such small trading fees of just 0.2% compared to other exchanges. You can also get a $10 bonus if you use my link in the descriptions below. But I know that many of you live outside of Canada, so just use any reputable exchange to buy your first small amounts of Bitcoin. Later on, make sure that you move most of your Bitcoin off of the exchange to what's called a cold wallet, something I'll explain about in future videos. So I wanted my hard-earned money to grow faster. I wanted it to not just outdo inflation, but to also get me to financial independence faster. Let's talk about the inflation part first, guys. Let's look at this chart comparing various assets you could invest in. This is in the US market compared to inflation, and this chart is from 2024 from one of Michael Saylor's presentations. Down here you see a line that says consumer inflation. This basically shows the CPI or consumer price index you hear about on the news all the time. In Canada, it's about 2% in 2025, in the US about 3%. For most countries, it's about 1 to 5%. Unless you live in Turkey. Now let's do a thought experiment. Imagine you had $100,000 and you left all of your hard-earned money in a checking account, earning you 1% or less. Over 14 years, your money would have only grown by $15,000, which is tiny. What's even worse, your money would have grown slower than inflation. So even if you have $115,000 by then, that money is actually worth less than before and buys you less things. Now let's say that instead you invested your 100K in something slightly higher risk, purely based on the CPI numbers here. So here in the US in 2024, that was 2 plus something percent inflation. You could have thought, oh fine, I'll just invest my money in bonds, perhaps emerging market bonds. That way I'll earn an average 3 point something percent. Or if that's still too low, let's say you put your money into a high yield bond that earns you 4 point something percent, or even a GIC or CD that earns similar, and think you're good. But that's only 1 to 2% above inflation, and if you ask me, that is not good at all. Even if you'd invested $100,000 for 14 years at 4% return, that's only $174,000 after 14 years. Better than nothing, better than the checking account, sure, but you'll see in a moment why this is not enough. Next, let's go higher up and assume you had invested your $100,000 into stocks and ETFs. Now we're talking. If you invested 100K in 2011 into the S&P 500 and kept it invested until 2024, your money would have grown by over 13% per year, resulting in a six-fold of your money, or more than $600,000. Now here, you're hopefully starting to see how much of a difference it makes, and that you better choose wisely what you invest into. Now, of course, we could just stop here and be happy. That's almost what I did. I would have just continued investing most of my money into the S&P 500 or something comparable if I hadn't discovered Bitcoin. But here's something you need to know, guys, something I discovered by following Michael Saylor, founder of MicroStrategy, now Strategy, and one of the biggest leaders in the Bitcoin space. This really opened my eyes. Listen to this.
The government wants to calculate inflation by constructing a market basket of consumer goods.
Yes.
And then the trick is they just keep changing what's in the basket. So they call it a hedonic adjustment.
Yeah,
so
exactly. Well,
I create a basket of, by the way, I create a basket of goods that are not likely to go up in price as I print money, and I put that into the basket.
For the longest time, I thought that inflation was only that 2%, 3% single-digit number that I had to beat. But that was all a lie. The governments around the world can change the components and weightings of the CPI to fit their narrative. Tell me, if you go to the store to buy groceries, is it really a 2% inflation rate you see? If you ask me, it's way more. And then there's the fact that there's not just consumer inflation or the CPI, but also monetary inflation. Monetary inflation usually refers to inflation that happens when governments print money. To make it easy, let's just assume there is $1 million in the economy right now and you hold $100 of the total. All things equal, what do you think happens when the government prints more money? For example, another $500,000 out of thin air. What do you think will happen to your $100? It's easy. The value of your money drops. Your purchasing power drops. When before your $100 bought you one cart of groceries, now it buys you 2/3 or even less. On this chart on the right, you can see the M2 money supply growth of the major central banks. M2 is basically the amount of liquid money available in the economy, including both cash and near cash assets. And you can see that around the world, it has been steadily growing over the years. When you hover over the red line here, you'll see that the yearly M2 growth of the major central banks around the world has been anywhere from 6 to 14% per year. Based on this, you can imagine why your money is buying you less and less over time. In his presentation, Michael Saylor even said that the monetary inflation is actually the cost of capital, which is the S&P 500. Here it says SPY. It's basically an ETF that tracks the S&P 500. What this means is that the real inflation is actually the rate at which your purchasing power is diluted compared to productive assets, especially equities. Here, the S&P 500, for example. So the real cost, the trade-off of holding cash, is the return of the S&P 500, which on average was about 13% from 2011 to 2024. So in other words, whatever you're investing in now, if it doesn't outperform the S&P 500, you're losing out. And the sad truth is that very few assets outperform it. In summary, most assets lose out, and you're losing money or not keeping up with inflation, losing all your hard-earned money to nothing. But as you can see from this next chart here, Bitcoin clearly exceeds monetary inflation and of course consumer inflation by a league. You'll see here that there are some other assets that do slightly better than the S&P 500, like the US Nasdaq 100, and there are definitely some ultra performing stocks like Nvidia or perhaps Amazon or Apple. Here you can see the percentage of stocks in the S&P 500 itself that outperform the index. For example, in 2020, 59% of the stocks within the S&P 500 actually outperformed the S&P 500. But then in 2023, you see that number dropped to only 24%, meaning that half of those stocks in 2023 now underperformed the S&P 500. You see where I'm getting at? It's difficult to know or predict which stock exactly will outperform the S&P 500 unless you have the time and knowledge to really look at the numbers. And that's why many people, including myself, stick to investing into the S&P 500. But Bitcoin, you could say, is a whole different animal. Here you see that from 2011 to 2024, recently Bitcoin grew by 60% every year, leaving all others in the dust. 60% is insane. And note this, guys. This 60% was an average number. It goes without saying that Bitcoin's price didn't increase steadily by 60% each year. Wouldn't that be lovely? But that there were years where it grew less than 60% and years where it grew much more than that. End of 2011, Bitcoin's price was just $3 something, then $65,000 sometime in 2021 and hit $100,000 end of 2024. So you see that over the long term, Bitcoin's price increased consistently, but in the short term, it's extremely extremely volatile. And that is why I'm saying that Bitcoin is the best long-term investment. It's not something you buy today and sell tomorrow or next month to pay for your tuition or to pay off your mortgage, because Bitcoin's price may go up or down in that short time period. That's why you should only invest money into Bitcoin that you can hold for the long term, at least 5, if not 10 years. So here's one of the strongest, if not the strongest reasons why Bitcoin is the best asset to invest in over the long term, in my opinion. That's growth. Bitcoin is what I believe will grow my money the most. And that's why I'm investing more and more money into Bitcoin. I only put money for emergency cash into things like GICs or CDs in the US, or what you would call time deposits in other parts of the world, or into my savings account. I still invest some into ETFs, but the proportion I invest into Bitcoin has become more and more as I learn and understand more about the wonders of Bitcoin. But that's not the only thing, of course. You can't judge an investment just by its growth. What if it grows fast but it fails, or it gets diluted? Bitcoin's supply is limited to a maximum of 21 million Bitcoins. That's the maximum number that will ever exist because it has been programmed to be that way. Anyone who understands code can look into Bitcoin's code and check it out for themselves, as Bitcoin is open source and there are no secrets. And what does that mean for us? It means that there is no diluting of Bitcoin. There is no inflation of the asset. You can't just go and make new Bitcoin. On the contrary, the number of Bitcoin being mined or created are getting smaller and smaller, and with that, Bitcoin is getting more scarce. And what is the consequence of a scarce asset? It will become more valuable and increase in price. Granted, Bitcoin's growth will slow down as more people come to adopt it, but for a very long time, it will still perform better than even the S&P 500. And in the next 5 years, I believe we're going to see crazy growth. Now, guys, let me know in the comments what you think of all of this. Has this changed your mind in some way? I'd really love to hear your thoughts. And if you want to start buying Bitcoin, don't forget to check out NDAX and use my referral link to claim your $10 bonus. Thanks so much for watching, guys, and remember, buying 1 Bitcoin sounds big until you realize it's just stacks of Satoshis. 1 Bitcoin equals 100 million Satoshis. And for the price of 1 coffee, you can stack thousands of Satoshis a day until one day you can own a whole Bitcoin. Let me know what other videos on Bitcoin you'd like me to make. Thanks for watching and see you again soon.